CIEN is one of the few exceptions in the AI infrastructure stocks. Underlying trend strongly bullish. Okay, it got a bounce like the I would say the broader market and indeed the AI infrastructure software and crypto asset stocks. It got a bounce on the 21st of November and has maintained it. It has gone on to even went on to print if it's 2 week high as of the 11th. That was about 2 weeks ago. Yeah, 2 weeks ago. Yes, yeah, 2 weeks. No, no, it wasn't 2 weeks. Almost 2 weeks ago. Okay, it printed a 52-week high in the midst of all the apprehensions, and is attempting to retest that last 52-week high. The extrapolation of its 3-day moving average and indeed 40-day moving average is that higher prices will continue to print. In the interim, it's saying that it's gonna this strength it built up. I would say this strength picked up. It got a bounce from its for 21-day moving average on the 18th, Thursday the 18th. So the extrapolation here is saying that it's going to hold it up till Boxing Day, no, up to Christmas Eve, the 24th of December. But in any case, we have been able to break down the data from this daily chart, including we had a market grid, but the market grid is not from this daily chart because it's a bit sluggish on this daily chart. So we use the market grid data from its 4 hour chart, which reacts every 4 hours. So this is what we have here. So yes, we have the stock is trading at a premium to all of its moving averages. You can see that 5.6% to its 10-day moving average. You can see all of that. And then we have the price pressure momentums. They measure the angle of attacks of the various moving averages, and they also have derivatives. So the first derivative gives you the pressure, the activity pressure, buying or selling pressure, and then the second derivative gives you the pace. So this refers to the 10-day moving average. You can see here first derivative accelerating aggressively, second derivative positive acceleration, interpretation extremely bullish momentum when above the 0.25 threshold. So trend mode is from 0.25, and then 0.15 to 0.24 is maintenance. Okay, and then anything below 0.15 is from 0 to 0.14 is maintenance. So this is for the 21-day moving average. Strong upward bias, momentum building, positive derivatives indicate sustained strength. And for the 40-day moving average, solid trend confirmation. Second derivative shows strongest acceleration amongst all price pressure momentums. Then this is the 200-day moving average, which underscores its underlying trend. You can see here, you can even visually you can see sloping bullishly upwards. All time frames aligned in trend mode, rare confluence, long term structure turning decisively bullish. So this is that market grid I'm talking about, but it is from its 4 hour chart, not from its daily chart. The essence is that the 4 hour chart reacts every 4 hours. It would have since updated. And that's against the daily chart that's going to wait for the next market open to react. So we have the resistance and the support zones. So as things now right now, it's up now. This is Monday the 22nd. It's up 1.59%. The price is 234. Okay, so we have yeah, okay. It closed the session on Friday the 18th at 230.34. So it is where it is right now. This is where it is. Okay, 50%, 70% of doing so, it has already passed it already. Yeah. So 236 probability 55%, 238 45% extended target. Support zones 75% of it testing 228.57. First retest likely. Okay, so we have the key simple moving average reversion probabilities 218 40% within the 3 to 5 trading sessions, 205 25% within 10 sessions, 199 15% requires a trend break. Then we have trade setups. This is not a recommendation that you should apply at all. If you apply it, you may lose money. Okay, so you need to be very much aware of this. So the bullish continuation play. Entry strategy aggressive. Current levels, okay, has actually exceeded the current levels. Yeah, breakout chase. So conservative will be this. So as things stand right now, this setup has already been overtaken by the fact that it has already moved already. So yeah, but just for educational purposes and for we just have a look at it. Okay, so and then those are the targets. Okay, it's gradually approaching that target. Yeah. Okay, so we have a long-term trade setup here, 30 to 90 days. The thesis is that the 200-day moving average or the price pressure momentum indicates price pressure momentum values 0.7146 suggests the 200-day moving average is in a strong trend mode for the first time. Price at 102% premium to this moving average indicates a major regime change from previous consolidation. Entry zones will be 215. That's a pullback to 215 to 222. Okay, 55% probability of seeing this zone. So your secondary entry point will be 205 to 210. Okay, long term target will be 297, 50% of hitting in 90 days. 247 second target, 278. Okay, third target. Yeah. Stop loss will be a break below $190. Okay. Position size and 30% at the first slash current slash first pullback and all of that. Okay. Probability of long term success 65 to 70%. Supporting factors, all price pressure momentum timeframes aligned. Rare confluence, price pressure momentum derivatives all positive. Volume expansion on a breakout 4.53 million. Clean break above multi month resistance. Okay. Risk factors of extension. 9%, 9 point, yesterday on Friday it gained 9.32% potential exhaustion gap. Okay. Mean reversion pressure 15% plus premium to uh, the 40-day moving average suggests a pullback likely before continuation. Okay. Yeah. Market grid compression only 15.36 dollar range. Okay. Between the top and the bottom 6.7% total range indicates a tight technical window. Optimal strategy for aggressive traders: scaling to 50% position now and add 50% on deep to 226 to 228. For conservative traders, wait for pullback to 218 to 222. Uh, Build full position there. Okay. Overall probability of hitting 245 within 30 days is 55%. Probability of testing 215 to 220 first is 6%. The alignment of all price pressure momentum values in trend mode is exceptionally bullish, but the magnitude of yesterday's move warrants caution for immediate entry. So yeah, this is a highly exceptional stock. As things stand right now, some people are even suggesting trading credit spread debit spreads, meaning you sell a call and then you buy a higher value option, a higher value call. Yeah, that's not a recommendation as well. Just be very much aware. Yeah, that's not a recommendation at all. Yeah. So yeah, so that's one of the strategies people are employing. For instance, you sell. What it do is it's indicating is you sell this contract. You can sell this 245, and then you buy the when you sell at okay, you can see the spread is not fantastic. Yeah, so it may not be a good move,